And let's do this. Welcome, I'm Alex. I trade a managed account over at InstaForex, also known as PAM. And today, talking about some price action formations. Before we start though, please understand these ideas are not trading advice, they are my interpretation of price. And so please keep that into consideration when you are watching this video. Also, for full disclaimer, it will be down there, and I'll add one up there, I think. Anyway, so today, since I made already one video about the pin bar, I thought we must continue the series. I mean, this is important, right? So, what's the next step? Next step is explaining, in my opinion, explaining first of all, engulfing formation, and then if I explain that, I have to do the reverse as well. So that means we have to go over dark cloud cover or piercing pattern, depending on up or down. Engulfing, as I said, up or down. Bullish and bearish, right? And I won't get into the pin bar, but if you haven't seen the video, check out the pin bar video. Okay. Now, let's get into the chart. This chart is from one of my accounts, and what I want to point out here is I highlighted the blue area and I went long, right? And the stop is here and whatever. And the black bar and the small white bar represent what I think is harami formation. Harami. And that in itself, the harami formation in itself does not contain any power to go up, although it's part of the three or two different variants that are formations that are saying that we're losing power. And if it's made like this, it's made here, it is a harami formation, and it's usable if the trend or if price has been going down, and it means that we have been losing power going down, and the next bar is not useful, and the black one, the pin. So I'm just pointing out, harami after down move means we're losing power, meaning we lost power going down, and then we have a pin bar after it, showing rejection of whatever this is, meaning, well, it doesn't look good right now, but in my mind, this could very well hit this. And also, this small blue area here, it represents, mind you, this is the Kiwi daily chart, the NZD USD, and this blue area here, I went to an H4 chart and looked for where the problems might appear. As you see, the move up, this is the top, this is something, and this is like some problem before we came up to the top. You see, this is a clean bar, it stopped here for some reason, stopped here on the down way down, and yeah, so I just used this blue area, and if price comes to the blue area, closes within it or beyond, I will lock the trade. If not, I won't do anything. So now then, let's get into let's go over dark cloud cover, or no, let's go over engulfing pattern first. Okay, this is just a chart, whichever chart, whatever. Engulfing pattern. Let's find one. I found one. Okay. Oh, I can't do that. Oh, that's horrible. Yeah. The black bar with the spike, and the white bar with the spike. This, according to the definition by the man who translated the formations, this is engulfing formation. What is it? The engulfing formation is, for me, it's very similar in its use if compared to the pin bar, but it shows the power in the inverse way, meaning when the pin bar shows its power through rejection, the engulfing pattern shows its power by showing the direction of the power, right? And what we have here is black bar closed here, opened, white bar engulfs. So the following bar engulfs the preceding bar, right? You can see that the lows are similar, but the white bar is higher than the black, and thus it is an engulfing formation, and it shows that we have power. For it to be useful, we would need to attach it to some kind of a level, which happens here. This is a pin, but after it follows the black bar, and I know it's some small offset here, but if I wasn't that zoomed in, I probably wouldn't see it. So it's an engulfing. So first we have the rejection of the single bar, right, pin bar, and then we have the black bar closing below, meaning that showing that we have the power also as well going down. And then we have some bars, and again we have something similar to a pin bar. And what do we have? Black bar closing, power down again, and the reaction is down. So the engulfing pattern here showing power up, here, let me see if I can do that. Two together, the white and this black, then shows the power down, up, down. Okay. Now that is the power formation. Of course, to use these, we would need understanding of levels, and perhaps it's better if I make one video separate to explain the levels, but I will explain a little bit of it here. So anyway, that's the engulfing pattern, and let's get to the harami. Harami is, as you see, this bar here. So this huge black thing, and this white here. Criteria for this is, for me at least, honestly, I could look on the web and see what the proper definition or proper size of the second bar should be, but for me it's like if the white bar is like 15%, meaning distance from here to here is equal to 15% or up to maybe 30% of the distance here to here, meaning this is a small white bar. It could be a bit bigger, but it could not be up to the center, then it would be disqualified. Then it's a harami, and it is useful because price has been going down, and that's why this is useful. And the harami, as I said before, is a formation that shows losing power, and we saw what happened after it, just a few bars, but yeah, I mean, wow, goes down, forms harami, and then goes sideways. Go figure, right? Figure that out. I have no idea. And similar to harami, but not similar in outlook, is dark cloud cover, which is the I wanted to say it's the bear variant, and the piercing pattern is the bull variant, but it's wrong because They are losing power formations. Can't really do that. Let's see if I can find some on this chart. Yeah. Not that easy to find, or I'm just blind. I'm sure when I watch the replay of this video, I'll find at least 10 of them, and I want to stop myself, but I can't do that now. Searching. The idea is, if we compare to the harami, for example, with this big black and the white after, price has been going down, forms useful harami, right? The dark cloud cover changes the definition of the second bar, and the second bar should be from 50% retrace up to more, maybe 80, 90%, something like that. I'm not sure what the limit is, but pretty much that's what I eyeball it as anyway. And what the heck, let's use this one, right? Or this is nice. This is nice. This one, the white and the black. Now notice the distance of the open and the close, right? Opens here, close there, opens here, close there. So the close is more than 50% of the bars, white bars range, right? That's a criteria for the definition of the bar. It means losing power, and the way this is put, it's a dark cloud cover because price has been going up like this, and I always like the name. I always just call them dark cloud, and I always see them on top, and losing power to go up means that they are useful to see. Oh, maybe I should lock something if this forms at a previous level, or forms somewhere, or outlines another formation, or together with something else. Yeah, maybe a pin bar is here and this goes up, and that really tells me that it's time to lock that long, right? Because power to the upside alongside is failing. And a similar formation would be the reverse. This is a bad example, I think, because the white bar is too far into the black, right? But nonetheless, let's use it. So we have black bar opens here, goes down, and opens, goes back up, and as you see, it closes beyond 50%. Not all the way, but some, yeah. And the way this is formed, it's called piercing pattern, and it means we are losing power to the downward move. And another bar closed above it, just validating the move. I don't really use the dark cloud and piercing pattern too much because I don't know actually why. Maybe it's because it's hard to find them for me or something. I would probably find them if I had like a screen or formation finder or whatever, something. There are plenty of programs out there that will find these formations for you. A lot of the formations can be found, right? So that's the definition. Dark cloud, power losing, dark cloud cover, and we are losing the power going up, right? Power losing up is failing. And piercing pattern, this one, losing power going down. And harami, yeah, harami like this, and the white bar losing power going down, and like this white bar with the black losing power going up. And if you understand that and engulfing, you have come a long way. So look at this. This is interesting. So now I have to combine the signals or the bar formations with levels somehow to show you how that could be used. I'm not saying that you should do anything, but yeah, 1 second. Oh yeah, too much Pepsi today. Yeah. So price came down to this level, right? For whatever reason, didn't want to go past it, and we have a pin, and although this is like a pin or spinning top, and I know I didn't explain that yet, the relationship between the black and this white is harami, losing power to the downward move, right? Remember, but it doesn't mean automatically that price will just spike and just reverse, go straight up. But next bar, more power down. So the lower shadow is at the lower end, right? And the higher is at this. And notice how this black bar moved down, just closed at this level. I'm very zoomed in right now, but just pay attention to that. That's important, right? And then we have a spike. And it could not go close lower. That is very significant. Similar to the next bar. Open and close, and quite honestly, the white area here compared to the black, this white area is too small, in my opinion, to be defined as a harami, but it shows the similar effect. Again, huge spike, no close, close at the same level, respecting level, respecting level, respecting pin, close at the same level, respecting it. Here, another spike, respecting it. Tries to close lower, instantly white bar defeats it, power up. And what happens? Something, and then something, losing power to go down. This, if I would bought it, I would bought it here. Maybe here, on the engulfing formation. And it goes up. And this happens. Now, that's one example. Now let's go back. Oh yeah, I want to show you something else. Yes, of course. Pin and engulfing example again. Let me just check the time. Yeah, okay. Right, so what do we have? Price has come up to this level, right? Pin bar, some rejection pin, same level, black down, and white up again, and rejected, boom, straight down, engulfing. Let's pull this up. Notice, price goes down, something's happening down here, playing around. Comes back up to this level, pin bar, instantly rejected, boom, straight down, rejected. And again, open, close lower, engulfing formation together with the pin. White bar is then the pin bar. Black bar with the white together is the pin bar. And just 1 second, yeah. Yeah, so reinforcing the white and together also rejecting the level. So it should be powerful signal. The question is there risk to reward enough for trade? I'll have to, check out, check the previous levels. This looks like chop, by the way, but that's another example. And price goes down. This was the low that we can see on the chart. I know that I can zoom out. I'm not doing it, and I'm not doing it on purpose. I'm doing it this way on purpose. This is the low that we can see on the chart. Notice this. Lines, oh yes. Reference, let me move this. Oh, it's low. And price came from the rejection way down. Closed here, close, and a spike. Not significant, not strong. If it was strong, it would close, maybe it would close like this. But it would not have this spike here and this spike here. This spike was completely gone and it just boom straight down. And if this spike was completely gone, then this black bar looking like this. And to me, it's a lot about the interpretation. How does this actually look? Important, right? And the next white bar follows, and guess what it's called? Harami, right? Power to the downside is losing. Lessening, right? And some. And then finally, this one. Strong force closes beyond it. And price dances around. And I am wondering, how long is this video? 21 minutes. Right, so now we have some examples how this works. And let's zoom out. Let's do something else. I'm just holding down page up. What do we have on screen? I have no idea. It's just a chart. I don't know what's happened. It's apparently 2016, February the 2nd, on an hourly chart. I have no idea how this will end up, but I will try to use my knowledge maybe to. We have the high up here. This is the high. Actually, I don't like this for the ultimate high, but I like this white bar because this closes here and then we have the spike, right? And notice that, if I encompass this, notice that and the black bar and this harami, right? Shows the power to the upside. Chart is, yeah. Chart anyway, chart showing that the power to the upside is stopping. Goes back up. Notice that it closes within the high. It does not close higher. That is telling me that, okay, but it's trying to go up. And we have something kind of looking like a pin and maybe kind of looking like a dark cloud cover, right? And price comes back down. And yeah, next time, huge spike. Again, cannot close above. Apparently it happened yet another time. So it should be significant as well as this. Let's do this. And maybe price will go lower, so I'll just do the lower side as well. And this is MetaTrader, so when you press F12, you'll get one bar at a time you press, right? One. See, again, harami, stopping close to the area. Closing through the area, not higher than the spike. Question is, I don't know what's gonna happen, but will there be enough power to go beyond it? Maybe we'll just see like a spike now, a pin bar, and then price will go down. Or maybe we'll see a force strong bar, price going up. Until we see that, I see that when I do my trading. I won't do anything. It looks like this. Okay. It's not a reason for me to do anything. Next bar, pin rejection. Now, you've seen that before, right? I bet some of you have seen it before. So the pin bar saying that, well, listen, we tried to get up here. Could not, and it closed lower. And if I'd guess, it could probably continue lower, right? Spike, spike, spike. Hesitating. Force down with the engulfing. Another force down with the pin. And harami, and yeah. I will see what happens after this. Oh, power still down. Engulfing. And as you see, that's price moves around, right? So that's how it looks. Now, so I'm giving you some examples of how to use this. And I will show you something else. Let me just clean this up. Object list. Awesome. Now, let's see if this is correct. Yeah, good. So this is my Fibonacci tool, but I have modified the numbers to use it as a measurement tool for risk to reward. I've seen many people do this. I thought it was a great idea, so why not? Right? Now, let's take, this is not about prediction, but this is about showing more. Let's do this one. Let's do this. Right. Example. Is there a good example on this chart? This is a good example. Okay. This way. This way. Okay. Now, what do we have here? Price has been doing something which looks like a chop, and then we have like a spike here. So maybe this chop, right? Price then goes sideways, tries to go down. And it's important because if price just goes sideways like this, it's pretty much at the bar. You see that this bar is at this bar. This white bar is at the same level as this bar, etc. All of these bars at the same level as this bar. And if price would return from this level, return up, I would not count it as a new level because one thing that is important for me when I look at the charts, one second. Is that when the bars move here at the same level, I really don't, I just discount that. It has to move away. The bars have to move away from this actual bar, right? By the distance of what the one normal bar size is. And that thing, one normal bar size, is something that I eyeball. On this chart, it looks like one normal bar size is this. And right, thickness of this one, right? Here, these bars, this size, these are bigger, this is bigger, this is bigger, so maybe a little bit bigger, right? This looks like it could be normal bar size. And I will add that distance on top of the top. Oh wait, what am I doing? I'll add the box on top of the high, and then I'll keep top at this. That way I have a cushion, right? And if I enter on this engulfing formation, you see spinning top plus black bar opens at same level, closes beyond lower than the open. Power to the downside. This particular trade I wouldn't take because of risk to reward. Let's say I took it anyway. I'd have to look for so many trades. And yeah, so let's say I took it anyway. Now, as you see, price has come down to this, went back up, came down at this again, right? So it means that, well, this area should be important. And just before this formed, the engulfing formation here, just before that formed, we had this huge spike, reject the level. So it means that, well, price doesn't want to go lower than this. Let's change the color of that to make you understand that this is important. So if I was short here with the stop here, entry here, when price finally spikes is enough. If it spikes, that's enough. If it closes below, that's enough. But the idea is, when price reaches the point where it had power or problem in the other direction of where I'm going, I want to lock it. Now, with this example, when I lock it, it ends up being a scratch trade, maybe plus 5 pips or something like that. However, I mean, 5 pips is plus 5 pips. It's not a loss, right? Right? So, that is the locking mechanism. So, because this was the low, again, low comes away from price by enough amount. Normal bar size, remember? Whoa. Bar size is this. Goes as soon as this closes, it's okay. Comes down again to the same level, showing me that, well, engulfing power up, harami stopping down. Yeah, this is significant. This is significant. Let's put this here. This is significant, and it goes up, and this is the spike now. This is the top, right? And yeah, if we enter short on this, price before this rejected the recent low. We don't know about this here, remember, we only know about these two. Price rejects these, meaning that this level here, the small spikes and the open and the close, that's where, if we get to, we are short, I want to lock it. That is what I do. Again, that's not advice, anything you should do, but that's what I'm explaining, what I am doing. Right. And you may disagree. Fine. Anyway, yeah, and so locked here, I might have a take profit here. And this time it may or may not hit my take profit. That's also fine. This is only one example. Let's make another example. Just forward so we don't skip this. Yeah, okay, we skip them. Yeah, there was no good trade here. I'm gonna find a nice trade. Look at the way this spikes, by the way. Look at this. See this? It came up to here, gap down, harami up to the top. Then, when it comes back down, spikes it. Then later, comes back up, goes back down. Huge freaking spikes. Yeah? And we're using blue now. Huge spikes, yeah? Goes up, huge spikes. I call them spikes. I know some people call them shadows. This is one example of where I said the normal bar size, right? Like a medium bar size, maybe maybe this box, the height of it, could represent pretty much the normal bar size. If this is a retrace up, it would have to go down by this amount from the top to the bottom. Does that happen? The answer is no. Do I then take any trade here? No. Yeah, what else do we have? Don't need that. Yeah, this is a good one. Fairly decent. This signal would fail. Or no, it would not fail. Now, look at this. Look at this. So, price goes down, comes back up, goes down again, let's go back up. This spike is at a similar level to this, so I will deem this as the low, right? This is ultimately where the power came to create this high. The high. Outline the second one. So yeah, if this is a pin bar and I want to enter reverse on this, I would need the medium size, yeah, on top of the high. Remember, let's make a bar box. Okay, this box, whatever, let's make it smaller. Top of the mic, and then there, stop would be there. On this example, it's safe here. That's not my point with it. My point is this: if this is the high, this level, this black line is the high from this level. We had a small retrace, and the retrace is big enough because normal bar size. See? Bar size, it goes further than the normal bar size. Now, I know this is a bit skewed, but it's an example. It goes to this level and then goes to the same high again. So, we had the power to go down somewhat. And we had the power to come back to the same level again. It happened 2 times. One top, second top, same level. It means that if I enter short here, if price comes to this level here, lock it. Orange before, let's go with the orange again. Another orange, but doesn't matter. Look. RR is not, it's fine, RR is fine, target is here. Spikes here, maybe I would put it here, but I would put it here. Anyway, if when price comes to the orange area, it will be locked, meaning stop is first here. So stop is here. At this point comes to this place. I'll look at the chart, go, okay, we need to lock this. And I'll move it down, not to the entry. I never did do that. I used to do entry plus 2 pips or something. That's not the way I like it anymore. I'll just go maybe like this. Why? Again, it's the definitions, it's the eyeballing, it's I think there was sort of power in this area. And so the stop can be here, it's fine. It's a few pips. It's not 2, but it's a few pips. And yeah, it comes up and it hits it, doesn't reach to take profit. Who cares? Second signal though, again, same thing happens. Let's see what happens. Yeah. Orange area still valid because the same thing happens again. This time the entry is this, and well, the stop would have to be higher up because the box on top of the spike. And so let's say it's like, and 1 for 1 is down here. Okay, risk to reward is not okay. Anyway, so I entered here. When price comes to the orange level again, it's locked. And example of that, what could I do? So it's first here, and maybe I will do something like this on top of this, reversing harami within this spike. Yes, whatever, just again eyeballing it, right? And I can't really explain it much more than that. It's just practice, training, look at the chart, see what the chart is doing, and it's locked and it continues to go down a lot. And I will say, when this black bar forms, I may want to push it down a bit, maybe like this, the top of this. That is also eyeballing, training. Can't explain it. I just like doing that. I see the power came here, but I wouldn't do this at low, right? Because this, obviously, the orange area obviously is defeated, but it should be strong again, as happens with the spikes went back up, right? Back up. Anyway, so that's why I'll move the stop like to this point and not to this point. I'll move it down, and you know, it hits my take profits with good measure, and 1 for 1. Now, those are some examples. And to go back to the beginning, engulfing, power formation, inverse of pin bar, but can be used similarly. Dark cloud cover and piercing pattern showing losing power, similarly like harami is showing losing power. And you had some examples. Yeah, I hope you learned something. Also, one more thing, check the disclaimer, trading disclaimer. Thank you.